Hello, Ben Kingsley here. Thanks for watching this RBA video announcement. And as you can obviously pick up, I'm not in the office as I usually am at the moment. I'm currently on a family holiday up in tropical North Queensland. What an interesting time to take a holiday. In fact, the last time I was saying to my wife that I took a holiday like this was back when Lehman Brothers collapsed, and I thought that was going to be the end of the financial markets, and it turned out to be a very, very significant global financial crisis. This time around, last week we saw huge volatility in the world stock markets, and that's a concern. And the reason why that's a concern is it basically plays on sentiment, and it plays on business and investment sentiment around the globe. So we saw at the end of the week a real correction occurring again. That's giving us some confidence, but I'd like to think that at the moment that sort of confidence stays and we see some stability in our equity markets, because if we don't have that type of stability, we're going to be in all sorts of strife into the future. So RBA kept rates on hold. That's not a big news. We expected that to happen. In fact, the Federal Reserve in America is probably going to keep interest rates on hold given the volatility of last week. Now, what does it mean for the property market? Well, in general terms, there's two sides of the conversation. One might say there might be a flight to bricks and mortar. As we saw in the '87 crash, we saw big movements to the markets in bricks and mortar when we saw the collapse of the markets in October of '87. But that being said, this time around things are a little bit different. We have historically low interest rates. So I don't see that big flight already occurring because, in fact, the reality is we've actually seen a lot of that movement in the market already in terms of Sydney and Melbourne prices. So I don't expect to see a big run and a big movement towards bricks and mortar this time around. And I think it's important to note that because in reality we don't want to see those types of movements. Already we've got enough people investing in property, and any further stimulus or speculation in this market is going to be unsatisfactory, and it's going to cause potential overvaluations of property and a reasonable correction, as opposed to we're probably at fair market value. I've been saying this for a few months now. I don't like to see any more market appreciation right across the board in the Sydney market, and in terms of the Melbourne market we're going to see a little bit more appreciation in the blue chip suburbs with both the domestic buyers and also some of the foreign buyers coming in and snapping up our new stock that's coming online over the course of the next couple of months leading into the spring and the summer selling seasons. So it's an interesting time in the property market, but not one that I'd be too concerned about with at the moment. It does require a bit of constant watching, but right now I'm comfortable where the situation is. In terms of the Australian economy, I don't think we'll see interest rates drop any further unless we do see a collapse in the overall equity markets around the world. It's really important to understand that when you've got an economy like we have at the moment, which is growing okay, inflation well contained at 1.5%, and general sentiment in terms of consumer spending and so forth being fairly good, I'm actually more optimistic than pessimistic about what's going to happen in the domestic economy for the coming 12 months. That being said, again, you get these global uncertainties and we all start to get a little bit more conscious and cautious, and that stops spending and that stops economic prosperity and economic activity, and that's a concern for us. But right now, from the beautiful beaches of Port Douglas up here in tropical North Queensland, that's bye for now until next month's RBA announcement.